What are accounting ratios? Accounting ratios, also known as financial ratios, are comparisons made between one set of figures from a company's financial statement with another. We use accounting ratios to determine whether a business can pay its debt and how profitable it is. Additionally, accounting ratios are used to predict whether a company is likely to go bankrupt soon. Overall, the aim when studying these ratios is to analyze trends. There are many different types of accounting ratios. Let's look at 10 of them. 1. Absolute liquid ratios, which measure the relationship between absolute liquid or super quick current assets and liabilities. 2. Activity ratios. These measure a company's ability to convert different accounts within its balance sheets into cash or sale. 3. Asset turnover ratios, which measure the efficiency of a commercial entity's use of its assets in generating sales revenue to the business. 4. Current cash debt coverage ratios. These measure the relationship between net cash that operating activities provide and the average current liabilities of the firm. 5. Current ratios or working capital ratios, which measure a business's ability to pay short and long-term obligations. 6. Debt service coverage ratio, also known as DSCR. This is the ratio of liquid cash available for debt servicing to interest, principal, and lease payments. It measures a firm's ability to service its current debts. We determine this by comparing its net operating income to its total debt service obligation. 7. Dividend policy ratios, with the most common being dividend payout ratio, dividend yield, and dividend cover. The dividend payout ratio tells us how well earnings support dividend payouts. 8. Financial leverage ratios. These measure the overall debt load of a commercial enterprise and compares it with the assets or equity. 9. Profitability ratios, which are measures that tell us how well a company is performing. In other words, they tell us whether the business can generate profit. And 10. Quick ratios or acid test ratios. These measure a firm's liquidity and ability to meet its financial obligations. Business people view it as a sign of a business's financial strength or weakness. Thank you for watching this Market Business News video on accounting ratios.